dollar's decline might soften the impact of inflation on the world economy. As the spike disrupted the world economy in ways that had few precedents in modern history, some of the greatest investors in the world are wagering that the worst of the dollar's rampage is over. The currency has already begun what some analysts are calling the beginning of a multi-year collapse after skyrocketing to generational highs last year, worsening poverty, and escalating inflation from Pakistan to Ghana. Almost every other currency will appreciate as their central banks continue to tighten, according to investors, who claim that the dollar is on the down as the majority of Fed rate increases have already been completed. While recent statistics have caused traders to reevaluate how high U.S. interest rates will rise, a move to risk assets from developing markets to equities is already underway on expectations that the strength of the dollar would weaken. Even if the dollar just recovered its losses for the year, many investors are continuing with similar wagers, upping the stakes for the dollar bearish. The US dollar seems like it will be wavering. The negative effects of the US dollar's rise were demonstrated by a major US inflation gauges report that was greater than anticipated on Friday. The dollar increased close to year-to-date highs as riskier investments, including emerging market equities and currencies, fell broadly. More than 1% was lost by the Australian dollar and the Japanese yen. It is impossible to overestimate the comfort that a declining dollar would offer to the world economy. Developing countries' import costs will decrease, which will aid in reducing global inflation. When morale improves, the price of everything from gold to stocks and cryptocurrency is also expected to rise. This decline in the dollar might mitigate the effects of the global inflation. It might mitigate some of the harm from 2022 when a higher dollar left a path of devastation in its wake. Food and energy prices rocketed upward, pushing some countries, like Ghana, to the verge of defaulting on their debts, while stock and bond investors suffered enormous losses. Several market players predict that the Fed will choose to raise interest rates gradually since they anticipate a reduction in pricing pressure. That opinion is at odds with the U.S. central bank's conclusion that inflation is still a concern and that more increases are required to lower it to the 2% objective.